Members of Congress are elected to serve the American people. At least that's their job description. But it would seem that many members use their elected position, and more importantly, the exclusive information they see, to wield the power of the stock market in their favor, profiting heavily by beating the American people to the punch on the best stock market trades. In America today, some of the most successful and prodigious inside traders are walking the halls of Congress. Just last year, Congress looked very much like a Wall Street trading desk. 113 Congress members and their families made an estimated $355 million worth of stock trades at home and abroad. And how did they do on all those trades? Well, the average House member beats the stock market each year by 6%, while the average senator beats the market by 11% each year. Most people would be pretty happy with those kind of returns from a professional, let alone from a member of Congress. Here are just a few examples of some particularly egregious trades that would seem to imply inside trading. On March 19th, 2021, Speaker Nancy Pelosi and her husband bought over $3 million in Microsoft stock. Now, it just so happens that 12 days later, Microsoft announced that they'd secured a massive $22 billion contract with the US military. And wouldn't you know it, that $3 million purchase reaped massive dividends. According to NASDAQ, Nancy Pelosi is now up 160% on that purchase. I'm sure we can all rest easy though, knowing that Speaker Pelosi had no knowledge of that deal, and her husband just happened to make a multi-million-dollar purchase because of a strong gut feeling. On October 22nd, Representative Kathy Manning, a Democrat from North Carolina, bought up to $30,000 worth of Lockheed Martin stock. And wouldn't you know it, 2 weeks later, it was announced that Lockheed Martin had scored a $10 billion deal with the military to modernize the F-22. Again, she just had a strong feeling the price would jump. Her position on the House Committee on Foreign Affairs definitely did not provide her any information that would have led her to make that enormous purchase out of the blue. But it's not just Democrats, it's people on both sides of the aisle. In June, Senator Tommy Tuberville, a Republican from Alabama, sold $15,000 worth of Microsoft stocks. Now, it just so happens that 2 weeks later, Microsoft's $10 billion contract with the Department of Defense was canceled, and their price plummeted, making that $10,000 sale look pretty smart. I'm sure he was just really lucky to get out of that purchase right before their stock fell after that news was made public. His spot on the Senate Armed Services Committee, though, probably had a role in making him even luckier, but neither here nor there. House Republican Pat Fallon also happened to sell up to $250,000 in Microsoft stock right before that billion-dollar contract fell through as well. Fallon, I might add, sits on the House subcommittee that oversees, get this, defense software contracts. Just like the one that Microsoft had, just like the one that he profited off of. Representative Zoe Lofgren, a Democrat from California, she bought up to $15,000 in Lucid electric vehicle stock right before she co-sponsored a bill offering tax credits for electric vehicles. And wouldn't you know it, since then that stock has gone up 71%. Very smart purchase. The list goes on, and it leads us to believe that either our politicians are brilliant economic minds with an uncanny ability to predict market outcomes and sell at just the right time, or they're profiting off of information that's available to them, but not us ordinary people. All of those, shall we say, unusual trades, though, have gotten the attention of the general public, and now, as outrage is building, so too are the calls for new legislation to ban members from trading individual stocks. Now, you might be saying, aren't there already laws on the books that prevent members from inside trading? Yes, technically. The Stop Trading on Congressional Knowledge Act, or the STOCK Act, was passed overwhelmingly in 2012 to deter any member of Congress from stock trading with inside knowledge. And what is the penalty for violating this STOCK Act, you might ask? Well, it's essentially a whopping $200 fine. The STOCK Act requires members to file disclosures and detail financial transactions over $1,000, anything over $1,000. Members have a 45-day grace period to report transactions involving stocks or other securities to the Secretary of the Senate or the Clerk of the House of Representatives, depending on which body they're in. Those who are late to report are supposed to pay a late fee of $200 the first time, with fines increasing if their tardiness continues. That hasn't exactly deterred members from simply failing to report trades that they're making. In fact, 57 members and 182 senior-level staffers on both sides of the aisle have violated the law, offering excuses ranging from ignorance to clerical errors. After all, what's a $200 fine when you can make millions on inside trading? Former staffers say there's virtually no enforcement of the STOCK Act, and no public records currently track who is guilty of a violation and who actually paid the fines. There's been no confirmation of non-public records of the sort either, so basically it's an honor system where members are expected to self-report, and if they don't, they get a little slap on the wrist in the form of a $200 fine. An honor system is hardly the way to police a group of people in a profession known for corruption and self-enrichment at the expense of the average taxpayer. The lack of transparency surrounding who faces consequences for violations leaves the public completely in the dark and renders the Stock Act nothing more than a mere virtue signal. 3 in 4 voters now agree that members of Congress should be banned from trading stocks while in office. And as a result, multiple bills have been introduced in the House and Senate, though they differ in levels of punishment and who should be restricted. One of the stricter bills was introduced in January by Senators John Ossoff and Mark Kelly and includes the legislators' spouses and dependent children in the trading restrictions. All must put their stocks and investment assets into a blind trust managed by a neutral party while in office. The punishment under this law for those in violation of the act would be a fine equal to the amount of the member's entire salary. Republican Senator Josh Hawley has introduced a similar bill. It's called the Banning Insider Trading in Congress Act. It would have very similar effects on members not being able to trade individual stocks, but simply being able to put their money, if they want to invest it, in a blind trust. Senate Majority Leader Chuck Schumer has now endorsed banning stock trades by lawmakers. But in December, House Speaker Nancy Pelosi defended the practice, saying that members should be able to participate in a free market economy. When you look at her trading history, it's easy to see why she wouldn't want to ban the practice. But after mounting pressure, she ended up reversing her position in February, saying if members wanted to do that, they could go ahead and pass it. Not exactly a ringing endorsement. But it is worth pointing out, she and other members of Congress don't necessarily support the new acts that are coming forward from senators and congressmen, but instead they support amending the Stock Act. So why now? Why is this happening now when clearly the problem has been going back for decades? One potential reason is COVID, as senators were widely criticized for dumping millions in stocks right before the coronavirus pandemic sunk the stock market. After COVID, there were some high-profile investigations into Senators Richard Burr, David Perdue, and former Senator Kelly Loeffler, whose husband is the chair of the New York Stock Exchange. They all had trades that seemed to be timed a little too perfectly, right as the market dropped, and those revelations sparked new calls for legislation. In early 2020, while Americans were losing their jobs and businesses, numerous senators were raking in millions from the stock market, leaving a bad taste in the mouths of their constituents. Burr's sudden stock sell-off came February 13th in 33 separate transactions to the tune of up to $1.7 million. Now, those trades happened just days before the market tumbled. These trades followed Burr publicly expressing confidence in the US pandemic response. He tweeted on March 20th that he relied solely on public news reports to guide his decision to sell. It's worth noting also that Burr was one of 3 senators who voted against the Stock Act of 2012 when there was an abundance of evidence that members of Congress were profiting from insider trading through the early 2000s. Loeffler's sell-offs, worth up to $3.1 million, began on January 24th, the same day the Senate Health Committee, of which she was a member, gave an all-member briefing on the coronavirus. She tweeted on March 19th that she doesn't make investment decisions for her portfolio and wasn't even aware of the sell-off until 2 weeks later. Senators Dianne Feinstein and Jim Inhofe also reported large trades around the same time, though they also denied that it was related to coronavirus. Inhofe, who chairs the Senate Armed Services Committee, sold up to $750,000 worth of stocks, crediting it to a, quote, continuing divestiture plan. Feinstein, the ranking member on the Senate Judiciary Committee, reported stock sell-offs in the millions, which, again, she said was done by her late husband. Whether or not these trades from members of Congress were illegal, it certainly doesn't help their rock-bottom approval ratings. Congress needs all the help it can get in gaining the trust of the American people, and perceived insider trading certainly won't help that. Nearly 75 lawmakers in total bought or sold stocks in COVID-19 vaccine manufacturers, Moderna, Johnson & Johnson, and Pfizer, during the early weeks of the pandemic. 15 lawmakers responsible for shaping U.S. defense policy actively invest in military contractors. More than a dozen Democrats concerned with climate change invest in fossil fuel companies. Members who consistently berate the news media simultaneously invest in at least one news or social media company. 16 members have stock in tobacco companies while publicly fighting smoking. The evidence is ample and apparent. Those elected to serve the American people are using inside information to beat the public, that's you, me, and taxpayers around the country, on stock market trades. It's an inherently unfair scheme and amounts to no less than insider trading. It's time Congress puts the trust of the American people over lining their own pockets.